Hello and welcome to this week's Elite webinar. I'm Riz, glad to have you on. Before we get going, just remember, no sponsored bullcrap, no nonsense, no clickbait, no hype, fear mongering, or anything of that sort. Straight to the point, insightful, and of course, factual insights to you directly on YouTube. And if you're watching live, once again, to Elite members, thank you for being on, for your support. And of course, for those watching on YouTube, uh, whether it's recording, whether you're Elite member or not, please give it a like, make sure you're subscribed, and comment. It helps a lot. I know I say it every week, and ad nauseum, but it really does help, really matters, and I truly, truly appreciate your support. And here we are, continuing on. December, first week of December is done, right? And we're so, so close to 7,000 on 6,100, sorry, on the S&P 500. I cannot believe it's 6,100. It seemed like, you know, 5,900, 6,000 was going to be that golden number there. And we're decently past that so far, and it looks like we're not looking behind, it seems. If we really want to kind of be picky here, I'm going to create a duplicate support here. I'm going to duplicate this and I make this support here at 6,000. Okay, so a little bit of live, well, for those of you on live charting here. So this is gonna be a short-term support at 6,000. Okay, clearly you can see that's a key level there as well. Followed by another, I have this short-term support as well because, again, there's no precise, let's say, definition or that I define short term as, because people usually ask me, well, Riz, what's short term? What's long term? What's medium term? And I always say, great question. There just isn't a defined thing. For me, short term, we're looking at a support area within the next last few weeks, right? Maybe a couple months. Medium term for me is usually, 2 months, 3 months, all the way to maybe 6 months or so. And then I consider a little bit more longer term to be uh, more so like 6 months, 1 year type of area, right, or longer, right? So hence why I have the long-term support down here. This is very much uh, going back to the summer, uh, beyond that actually to last year, right? So last year's strong support going all the way back to sorry, April, not last year, April. I'm gonna flip back to year to date. Here you go. So April, you can see that key area there. Okay. So it's market been continuing on. We got what? Let's say since the consolidation that we had around 58.65, if you really want to measure that move, right? Let's take a look here. Again, nothing precise. We don't need to be precise to the point or tick, but to give you a rough idea, we've kind of gone up past that, consolidation area about 3.75%, right, in 2 weeks, which is pretty significant if you think about it. So the market is definitely bullish, definitely going into the holiday months, quote unquote, what's it called? Santa Claus rally, is probably something you've heard me and maybe elsewhere mention. Usually December can be a decent month. A bit slower from a volume standpoint, a bit slower from maybe events and so on and so forth. Obviously, no major earnings season or anything like that this month. But yeah, nothing too outstanding or extraordinary besides the fact that we had a nice continuation the past 2 weeks upwards, quite bullish. And of course, leading us to the RSI being just a hair away from being overbought. But honestly, for all things, all intents and purposes, I consider this to be overbought. Okay. The last time it was overbought, you can see right here, was November 13th area, right? So remember, it can stay a little bit elevated for a few days, even a few weeks I've seen. Okay, moving on to these sectors. So year to date, we've got sectors here. Take a look at the communications sector. I know it's a little bit covered there. Apologies, but leading there with a 39, nearly 40% year-to-date run. We got communications like Google, stuff like that, in there. Apple as well. We got financials, still a very solid second with a 33.5% run year to date. XLY, massive run actually. It's been extraordinary to see XLY, which is the consumer discretionary, move back up here as well. We got S&P 500 at 29% almost year to date, with the XLK, which is like pure technology, very much right there. And then everything else, like utilities, kind of slumping a bit. We've got XLP, which is consumer staples, real estate, energy, and healthcare, all underperforming the index. But healthcare and energy definitely, along with real estate, kind of the biggest laggards, right? XLP, the consumer staple, it's kind of hanging in there, not too bad. But the other three, all positive. Again, all the sectors are positive this year, but these three here are definitely the big underperformers. Um, with the largest amount of opportunities, I mentioned this in my Instagram story, um, as well. I said, again, it wasn't meant to be specific, but I said, there's the most amount of opportunities I see even now, um, and I'm sure it's going to remain this way for the next bit, are in the healthcare sector. Now, I don't mean your, uber speculative, risky, biotech company or experimental drug company that's, looking for FDA approval on a very obscure, niche drug, right? I'm talking about more so large cap, um, somewhat blue chip, uh, pharma and healthcare companies. Okay, so XLV is there. Um, that's something that I think is the most upside. Okay, flipping to the asset classes here, we've got oil on the left here. For those of you wondering why this looks a little bit different, because I've gone to year to date, but if I zoom out here, show you the data for 2022 as well, then you can obviously see we're at this long-term support. This is a long-term support, but if I go year to date, you can see the price action here once again, uh, lining up here, right? Very much so, 67 area being a key level. It's pretty extraordinary if you take a look back, all of 2024. This area is held up, and then you go back to 2023, it's held up, and then you go back further. 2022 was obviously a very, very strong year, very bullish year for oil, and obviously very bullish for gas prices and costs and inflationary pressure. But even if you go back to 2021, like, take a look at that. Yeah, it dipped a little bit below, right? So that's extraordinary to see. It's not too often you see these kinds of things play out, but here we are, right? We do know that commodities like oil, whether it's gold, oil, so on and so forth, they move, broadly speaking, in cycles, right? And you can see that at play. And when I mean cycles, I don't mean like a weekly, monthly cycle. I'm talking years, right? Most of the time, not always, but most of the time they operate in cycles. Okay, so very interesting to see here. Gold. Take a look at gold. We've got massive amount of volatility, big dump right after the phenomenal record-breaking run that we had up until the end of October, and then a big dump here, recovery, but now we've got this consolidation. So this is a clear, for those of you that are more proficient in technical analysis, a clear dead cat bounce. All right, drop and then pick up, followed by, a little bit of a pullback, or cool off, and then some consolidation, if you want to call it. Okay, again, we're looking at line charts, not the most, of course, uh, insightful from a price action standpoint, because we don't really care for the minutiae. We care over the broadly speaking, right? Take a look at, as I mentioned, in the big picture. So if I scroll out here, gold, you can see the extraordinary run that we've had, comparatively to 2022 and 2021. Massive run, 2024, right? Just extraordinary. So, gold, believe it or not, had been quite the underperformer. A lot of people were like, well, it's not going anywhere. I can recall, the last, before 2024, I can recall being on webinars with Chris and being like, guys, like, gold's not really doing much, not much of a hedge, not much of an inflationary hedge, not much of an outperformer as an asset class or a return standpoint, not much of anything. And then, like I said, remember cycles, and then we had 2024, right? For whatever reason, we don't know, because I genuinely believe it hasn't played out yet. We don't know. Let me circle this instead of just moving my cursor around. We don't know what this move here is signaling just yet. So it hasn't played out. Think of it like we're in a book and it's maybe it's a seven chapter book. Okay, hundreds of pages, seven chapters, but we're at like the fourth, maybe fifth chapter. So we've gotten the big, I would say, the plot and the broader, uh, events that have happened, but we don't know how it's gonna conclude, so to speak. And in this case, this is a clear signal of something, right? So we haven't gotten to the climax, we haven't gotten to the end yet, but we do know something's afoot, and that's really what gold is telling us here. You combine that with the price action and the moves in uh, the market, the bond yields, which we'll get into shortly, and oil, you can be like, well, like I said, that book is still there. We're still ticking page by page, but we don't know how it's going to settle or go. Okay. So flipping to bond yields, take a look at bond yields currently down now as we see uh, some mixed results here. We had some economic data. Nothing that's really stood out to me from a red flag or even a green flag, right? It's all been pretty okay, good, good is decent, decent is good type of scenario. Nothing really sticking out like a sore thumb. But bond yields have kind of continued to go lower. We do have a Fed meeting, uh, one last Fed meeting of the year. I believe next week, so not this coming week, but the week after. And so far, it's a mixed bag, right? There's been a couple Fed officials have said that they are a bit leaning towards um, a 25 basis point cut, but then we've had Powell over the past few weeks, a couple weeks that he did some talks. He mentioned that might be ideal to actually wait and see, take a wait and see approach. Things are still relatively strong, um, unemployment's good, all that stuff. So pretty interesting from a rate standpoint once, we're in the last innings of 2024. Moving on to the US dollar, takes its light little breather here, a little bit of a retreat here coming into this week. Again, by all means, all considered very strong. Let me flip to year to date on that, right? Pretty much slightly off the highs for the year on the US dollar index, but if you scroll out, you know, definitely not where it was in 2022, but still very, very strong, very healthy, very solid. Uh, we've seen as after Donald Trump became president-elect. And even more recently, I believe it was last week, he mentioned it was a soundbite or like a statement on Truth Social slash even Twitter, I believe, or X, sorry. He said that, who are the BRICS countries, right, that are looking to essentially be a little bit more insular, maybe get off the US dollar, or maybe transact more in their own currencies. Well, they were given a big rebuke by Donald Trump, where he said, look, if you guys are even considering having your own currency or getting off the US dollar predominantly for settlements in your trade, you guys are on high alert and you guys better be ready for massive retaliatory tariffs or economic policy, right? So they were put on notice already, and he hasn't even been in office yet, right? Officially. So very interesting to see. I've been saying for all that fear mongering that was going on the past 2 years, oh, US dollar, the collapse of the US dollar, and I just rolled my eyes. And I roll my eyes on even more because it just keeps being perpetrated and repeated. And reality, as I always say, is more nuanced, especially in the world we live in now. And not everything is a doom and gloom, but it's also not all sunshine and rainbows either, right? So I always said, look, the US dollar is here to stay. Yeah, there might be other countries maybe transacting more between themselves in their own currency, but that's bound to happen. That's not new. It's been happening, and maybe it's, going to continue to happen, of course. But the US dollar continues to be the world currency, world reserve currency, continues to be the largest, uh, most widely transacted currency in the world. It is used for trillions of dollars worth of settlements globally. in transactions between nations, countries, corporations, so on and so forth. Okay, so no worry about that. And then obviously Donald Trump coming in saying that again, whether it materializes into something or not, but the point is he too, realizes, understood that look, you gotta kind of flex the muscle that you have, so to speak, and the U.S. dollar is that muscle, and you can't lose sight of that, so to speak. Right? Let's move on to earnings. I got earnings with this. Let's go to that first. We've got couple of names that are interesting, but of course, like I mentioned earlier, there's not earnings season. We don't got some major tech companies, but we got a few that you might want to pay attention to. We got C3 AI. This is actually another AI company that's been pretty, I would say, bullish or had a has a gotten some volume and momentum this year, obviously with all the AI related stuff, right? Oracle, of course. We have also MongoDB, a database company. So these three are the ones that I think if you really want to keep an eye on things after Monday is closed, these are the three. Before open on Tuesday, we got AutoZone. Not really piques my interest. Nothing here apart from that. Tuesday after close, everyone's favorite meme stock, GameStop. Speaking of which, I believe Roaring Kitty, aka DFV, aka Keith Gill, he was quiet for the last few months after the last pump and then just went quiet. Um, and then now he's back. He made another post or something, which caused a run in GameStop and AMC. But hey, I don't know. I don't know what the hell the end game with that is or what's going on with that. Stitch Fix, Dave and Buster's, these two, I'm both not a fan of Stitch Fix, Dave and Buster's. I don't know what you want to call Dave and Buster's, but it's like one of those. I think it's like one of those like arcade game type of places, I guess that's what that is. But not too enthralled by Tuesday. All right. Wednesday we got Macy's, another retailer. And then after close we have Adobe, right? So that's another one to keep an eye on. Thursday, don't really care about anything besides after close. We got Broadcom and Costco. Costco, a big one. Costco has had a tremendous year as well, along with Walmart. I mentioned that in the previous few webinars ago, and how they're trading at pretty lofty fundamental multiples, right? You would think they're like tech companies or even like semiconductor companies compared to the valuations they're going at, right? Costco and Walmart, I'm talking about. But yes, quite the sight to behold. And let's move into the events, economic events, right? And we got Wednesday, nothing Monday and Tuesday of note, but Wednesday we got a packed schedule with again inflation coming in for year over year and month over month for November, right? So take a look at that, expecting a 3.3% core. But the ones we care about, or I care about specifically for November, is the actual inflation. And this is the year over year and month over month, 2.6. Market is actually predicting a slight uptick in that, and I think that's probably what we're gonna get because when we look at inflation numbers coming out of Europe, whether it's France, Germany, we've seen a little bit of an uptick in the month over month inflation numbers coming in. So that will be interesting to see. I do think we might see a little bit of an uptick here as well. Okay. As for how much it impacts market sentiment, a potential a Fed rate decision, I think it's expected. I think everyone knows maybe a slight uptick, and I don't think it's unless it's like we see something like 2.9, percent. I don't think which that's going to be the case, but if it does happen, then we might see a bit of a reaction. But other than that, I think the the Fed is pretty much on course to maybe hold and perhaps a 25 basis cut. Nothing really going to change that. And I think the market's also kind of expected inflation to settle here and not be much of a surprise. And then lastly, for Thursday, we have PPI data. Not too concerned about that. Okay. So that ends the economic events. Flipping back here to the chart, if you got questions, please do go ahead and ask them. Um, Speaking of healthcare, I mentioned for the sectors, like I said, that is the place where there is the most opportunities. Not to say there aren't any other opportunities, but there are definitely some I would say more so in healthcare. Speaking of which, we do have a few healthcare, uh, big pharma healthcare type of companies open already, as those of you in Elite know and can see. Dylan asked Google again, good old Google, take a look at this, right? Once again, similar to, I think we looked at it not last week, but the week before at Google, and it wasn't the most confidence inspiring setup. Uh, so we got Friday here. When was it the last week? Last Friday. We probably looked at it. It wasn't that Friday, so it must have been somewhere here. Um, when we looked at it, and it wasn't the most confidence inspiring. And I thought to myself, well, maybe hold off. And it dropped, pull back with some of the antitrust type of situations that kind of still brewing, still going on. Uh, there's a bit of uncertainty. It remains to be seen how that plays out, really. But with the market also being quite bullish, Google had a decent recovery and run. For me, I think this is not the most optimal entry. I feel like I much rather hold my cards close to my chest and keep more cash. For those of you that have been paying attention, know whether it's in Elite or even on my Instagram stories. Again, always keep an eye on those stories. I said that, I'm predominantly cash heading into the 2025 start of the year, and that remains to be the case. I don't see that changing much in the last final weeks of 2024. And for me personally, Google is one of those things that I'm just gonna keep an eye on, right? But this isn't the area that I personally feel I'm ready to take a long position. Again, obviously, I'm not gonna go out and short it, but I don't think it's still ready for that A plus setup for long. Okay. Uh, Chinese names. Jazz is asking about Chinese names. Jazz, you know how I feel about Chinese stocks, right? But hey, okay, let's pull up some, Baba, not the biggest fan, had a nice run due to Chinese stimulus, all that stimulus and all that money pumping and pumping that money directly into the equities market. And then it just, fizzled out. Who would have thought, right? Not the biggest fan of this company, just from a structurally standpoint, if you look at their corporate structure, I'm not a fan of any of these Chinese companies. Like I'm like, if I would buy a Chinese company, you have to ask yourself how one, what's the reasoning behind it? For me, it's like I much rather back and invest in companies that I know are have more strict accounting practices. Like for example, when you own Alibaba as a stock company, yeah, it's not going anywhere, it's not gonna like shut down fly by night. But if you look at the corporate structure, Alibaba, the company that's listed on the US stock market, you're essentially holding an ADR, right? Depository receipt, and then the company that effectively holds the ADR is domiciled in like the Cayman Islands or somewhere. So like really, if you really think about it, you really want to do that, with some of the sketchiness of China and their accounting practices, not to mention, yeah, it's a great market. It's been a growing market. It's a frontier market, but really, do I really want to expose myself to that? Like I don't know. I'm not a big fan. I'm not a big fan of also the whole retail model of what Alibaba provides. Obviously, it's big, right? Direct to consumer type of commercial, allowing businesses and manufacturers to directly, bypass some of that retail channel and go direct to consumer. But I feel it's a little bit too optimistic and not worth the risk. Neo and Baidu. Let's take a look at here. Neo, again, another Chinese automaker, seemingly. There's plenty. Um, why would I want to bother with what this is pretty much a penny stock now. I know back in the day, like look at this, right? Going into 2022, right? And 2021, like man, like this was the shit. Like this was like, oh yeah, this is the next electric company. This is China's Tesla. And yeah, maybe to an extent. Well, the fundamentals haven't materialized. Like it is where it is. Yeah, maybe some people could make a case for it being undervalued potentially from a fundamental standpoint. There might be more upside or might be a turnaround, blah blah blah. But besides the point, if you really look at it for what it is, apples to apples, it's dwindled, hasn't done much. BYD, for example, has pretty much been the poster child of the Chinese electric vehicle maker, right? The largest electric automaker in the world. And then Baidu, same thing. Honestly, like, why would I want to bother with these? Like, yeah, I know there's not too many opportunities for value plays in the market, but cash is a position. Why do I need to chase China for that? Right? Not to mention the massive, I would say, geopolitical risks that are there with tariffs. Why would I want to risk that or what that does? A strong US dollar, more protectionary US dollar, a more insular economy, more nationalistic economy, and then on top of that, you throw in potential tariffs. What's the point, right? So Dylan asked me, KO, we had a position, we exited for profit, and now it's kind of shaping up once again for a potential uh, entry again. So I'm keeping an eye on this. This is obviously a name we all know and are aware of. Setting up here around a little bit above the support area for long-term support, but nonetheless keeping an eye on it. It looks good for a potential entry, but again, no position as of yet. Okay. Um, Jazz is asking ASML. Okay, here we go. This is more of something that's down our avenue, right? ASML. So this is think of this like probably from what I've heard being compared to is like this is the mother of all semiconductors because this is the one like this is the oven. This is the oven, this and TSMC, TSM, they're the kind of like the ovens that really allow the chip makers or semiconductors, NVIDIA, AMD, Micron, Broadcom, Qualcomm, all these guys to do what they do. These are like the foundries, I believe, if I'm not mistaken. So this is a very interesting company. Definitely a decent setup here. Obviously, the price per share from a dollar standpoint is high, but most people it doesn't really matter. Like, it shouldn't dollar per share shouldn't matter too much. You can, especially in the day of fractional shares trading that most brokerages also uh, support for those of you with maybe smaller accounts. But nonetheless, this is a pretty good setup. Like you'll get forming like think of it like a cup handle U-shaped pattern here after a big drop post earnings, which seemed to be at first glance decent, like they beat, but I don't know exactly what their um, guidance was and all that, right? Because that definitely is gonna sway how it moved, but it had a massive drop post earnings, and this is looking pretty good, right? So I'd have to look at a deeper dive, but definitely a solid company, a good company, like I said, in the semiconductor manufacturing space. Okay, just looking good for a potential long. Just be mindful of that 50-day moving average, and other than that, yeah, earnings maybe obviously next year. So hopefully that gives you a little bit of insight. And I don't see any other questions coming in, so that's pretty good. Got a couple stocks out of the way, but no more questions. Okay. All right, no problem, guys. No problem. Thoughts on coin? Heard exactly about coin. Everyone's favorite exchange, crypto exchange. Obviously, this had a good run this year, all of 2024. Obviously, didn't have the best start, 2024, but all things considered, it had a decent run with crypto, specifically BTC, um, hitting all-time highs, passing that 100K threshold, and coin not quite at all-time highs, but definitely getting close to those 2021 highs, right? So huge turnaround in price here, and this is definitely bullish. I like from a trading standpoint, I personally don't like to enter during these setups, like these kinds of technical setups where it looks, it's just momentum. It's had a massive run post earnings, obviously buoyed by really crypto price action. So if we see Bitcoin drop like another 20, 30%, for example, from from the highs, right? From here. So maybe it goes down to 80K, right? For example, just example, bear with me. You're gonna see coin pull back too. So it's very much a bit of a proxy to the overall crypto slash BTC price movement, right? So you can't really trade coin without knowing that you're going to be exposed to some wild swings based on what happens in the crypto market. So for me, factoring that in alongside the fact that it's also had a massive run the past 2, 3 weeks, along with it reaching that almost 2021 high area, leaves me to be in the camp of just waiting and holding off. I'm not gonna go out and bet against this one, uh, but definitely not something that I personally want to take an entry long here. Okay. Uh, Jazz, yes, to your question, I'm not going to give away the stocks that you mentioned are holdings, but yes, I will say yes, I do plan on carrying them for the time being. Um, if anything changes leading into obviously the end of the year, um, I might, but I doubt it. I doubt it. I'm more leaning towards carrying into 2025. Okay. All right. No more questions. Hopefully you guys got something out of it. I appreciate the support being on, the great questions, and really, really hope you guys have a great rest of the December. We've got a few more weeks left. I know things kind of slow down, and rightfully so for people when it comes to the holiday season. Family, loved ones, taking things easy. Holidays is, a good time to recoup, to recharge, uh, you know, really take stock of the year that has really passed us by, and prepare for the year that is to come. Hopefully, a fresh start, a new beginning. Kind of like all those things, right? Yeah, I'm a bit of a pessimist, and I'm like, well, what is one day, from one to the next really change? On a calendar, flipping the page. But in reality, it's another fresh start, it's another reset, and I think we can all do with that, right? So with that said, I mean, we will convene again for maybe, another couple webinars before we take a pause for the holidays. But uh, if I don't get a chance to say this, have a great holidays, and be safe. And depending on where you live, I mean, it's cold here, it's snowing, uh, as you can see maybe on the bottom in my taskbar here. But be well and see you in the next one.